And we're live. For all those people who complain about that intro where we're playing our ad for the first 15 seconds, we now have an overlay screen at the beginning, so ideally that will satisfy everyone, so I don't have to stall awkwardly at the beginning. And I got my self-serving samba version of the happy birthday song, courtesy of the YouTube audio library, so thank you to YouTube for that. Man, what a week it's been, Tom. You tried to make your April Fool's joke the other day, and people took you too seriously.
Yeah.
Well, what can you do? It's a wild world out there on April Fool's Day, here in YouTube finance especially. People take it pretty seriously. Take us through it. What happened there, Tom?
Well, yeah, I think I just went a bit too hard. I maybe threw a bit of a low blow there with my April Fool's video. So I'm going to Omaha. That's like a genuine thing that's happening. Like, I'm not joking about that part, but yeah, I uploaded a video saying landed an interview with Charlie Munger while we're in Omaha for my April Fool's video, and people loved it. I took the video down because there were all these congratulations type comments, and I felt really bad about it. So took the video down, added a little clip to the end that said, "Guys, just check today's date. Like, watch to the end. Put a comment, pinned comment. Make sure to watch to the end of the video." At the end of the video said, make sure you check today's date, by the way. Re-uploaded, and like same thing. A few people picked it up that it was April Fool's, but quite a few didn't. Like, got a bunch of congratulations emails, and people really excited. So
the delivery was on point, and it was
came in too hot, I think.
It was too powerful.
Well, and to be fair, I checked the date, and it was the 31st, so that didn't help me really.
In the alternate universe,
you've got to adjust for New Zealand time. Maybe that's where I went wrong. I uploaded it too early.
You live and you learn, Tom.
Yeah. It's been there's some pretty wild April Fool's videos. We saw the Michael Reeves one this morning from where he had like a goldfish picking stocks for him, and that was funny. And it's always a good time on the platform. Man, what are we doing today? Oh, yeah, best ideas. We've been meaning to do this actually the last couple of weeks. Meant to do it in March, accidentally seeped into April, but hey, oh well. So we'll be going over some best ideas that we have for right now. Best doesn't mean good necessarily, but best of what's available. So we'll be doing that. But before we do that, just to remind everyone that we do have a new sponsor, a new affiliation with Seeking Alpha, where they're giving a discount for all of our viewers. If you use our link in the description, and you can get a discounted membership to their premium subscription, so that's pretty cool. And Seeking Alpha tends to cover all sorts of different stocks, including some kind of our lesser covered names that us value investors tend to find ourselves looking at. So it can be a pretty nice resource, and they got a lot of good content over there. So check out our link in the description, and that would go a long way towards helping the channel as well. So be sure to check that out. Meanwhile, subscribe, like, all that great stuff if you end up getting any value out of this, or not. If you just want to help us out, that's great too. Where should we start, guys? Should we just dive into our best ideas?
Well, I'm curious, do any of you guys use Seeking Alpha kind of on a regular basis to source new ideas or do your research?
I'm starting to now that they came around. It's starting to take a look more often. There's some good stuff on there.
Yeah, I use it a lot for, I don't use it, I guess, for idea sourcing or screening per se, but I use it a lot just to see write-ups of companies that I'm interested in. There's often, even with really small companies, there's often one or two, decent, well-researched write-ups. There's a few that you kind of have to filter past, I would say, as well, that can be quite surface level. And, some of those articles have lots of interaction in the comments and stuff, and there's often some really good kind of nuanced thoughts, like in the comment section of the articles as well. So that's what I use it for.
It's quite good to get the bearish thesis on any company that you're probably invested in. Like, it's fun to read about how much someone hates heritage. It's always a lot of good articles about that. So.
All right, are we ready for some best ideas? If that's all we have for Seeking Alpha,
I think just
Go ahead.
Sorry, Jack. I think just very quickly before we get into the best ideas, we should try and fill the chat with happy birthday, Jack messages.
Thank
25
you,
today,
Tom.
right, Jack? Happy birthday.
That warms my heart. Yes, it is my birthday. And it's not a joke, not a joke. Although my parents had to explain a lot when I was due to be born April 30th. So when my dad especially called into work saying, yeah, I'm having a kid today. And they're like, haha, yeah, sure, dude. And sure enough, I was born April 1st. April Fool's
So you were a
Day.
month early, Jack.
Yeah, I was. I was quite early. Get ahead, stay ahead.
There you go.
Hey, look
your
who's in
mom's
the
in the-
chat. Look who's in the chat. There she is, Mama Duffley.
Wow.
Say hi, Mom.
There's the real hero of this
Yeah.
story, right?
Yeah, it all started there. So thanks, Mom.
Hi, Mama Duffley.
With that said, now that my mom's watching and I know she's
Yes.
watching, shall we get into some best ideas? Who wants to kick it off?
I think birthday boy should go first, Jack.
All right, fine. I'm already warmed up, anyways, right? And thank you. I'm seeing everyone's messages. Appreciate it, everyone. So let's see. Let me pull up. I gotta reshare my screen without the elevator music audio. So here, let me actually go to Twitter real quick.
The super chat.
What a comment.
Are we supposed
I'll-
to pass that on to someone?
Yeah, I'll thank I'll thank Jason on my mom's behalf.
Great.
Actually, let me pull up Ticker now. So you're gonna have to hear me out here. I've been doing some more research on Tesla because
Ooh, okay.
it's actually a pretty compelling case if you take a look at the cash flows that have been. I always like to do the discounted cash flow model analysis. That's my go-to. And you could see that they've had pretty massive cash flow growth, relatively speaking, over the past couple of years. And into this year, they're up to something like 3.5 billion or so in free cash flow, which is, I mean, that's a huge jump from going from negative free cash flow all the way back in 2017 and into 2018. And they've really kind of turned a leaf there for free cash flow growth. So I'm really liking what I'm seeing there. We take a look at the balance sheet as well. They got about 17 billion in cash. So that's a pretty good start. Seeing some pretty nasty dilution, but you'd think that's going to stop sometime soon. We'll just kind of cross our fingers on that, but it's kind of one of the big red flags. But I went ahead and did a discounted cash flow, and it's obviously it's got a big growth curve ahead of it. So I'm trying to be decently conservative here, but because they're coming off a pretty low basis here, right now they're trading for about a $1.1 trillion valuation. So that's their current market cap. And I went ahead and started with that free cash flow year zero of about 3.5 billion. I went ahead and grew it for the next 5 years at 100%. So they're doubling each year.
That seems conservative.
It is conservative. Yeah.
Well, I'll get to the more aggressive valuation, but this is kind of like my base case. And then in year 6 through 10, I did ratchet it down to 90%, just to be a little bit more conservative. And I'm adding another layer of conservatism in here as well with the 30% discount rate, whereas normally I might use something like 15. So I'm trying to be careful there. Terminal value is a bit of a debate here. There'd probably be a good amount of growth left in it at the end of 10 years. So I still have it at about a 25% free cash flow multiple at the end of year 10. So that's what I'm going off of there. And then their excess capital being about $11 billion between their cash minus their long-term debt. So that gets us to a year 10 free cash flow of about $2.7 trillion. And you could pump this up a little bit more, but we'll stick with this for the base case because that gets us to, at the end of year 10, about a $69 trillion valuation. And
wow,
that would imply with that 30% discount rate that you have something like a 406% margin of safety. So, I mean, it's about as close as you can get to a no-brainer as possible.
A free lunch, even.
Yeah. That's actually a really good way to put it. And like you were saying, this is probably a base case. If we go ahead and pump this up to, I don't know, 150% over the next 5 years, and even maybe jump the multiple up to, I don't know, maybe 35, we'll say. And
yeah,
I got to actually expand the numbers a bit. Then we're getting it to, what is that? 29 or 294 trillion, if I'm reading that correctly, for a terminal value. So clearly huge range in the amount of growth they could have. And yeah, so that's my best idea. It seems like a slam dunk. That's all I can really say. I don't know. Have you guys looked at Tesla at all?
Yeah, I would say, I hear a lot of people often, argue for companies like Visa and MasterCard that they're kind of, bond alternatives. So they tend to use very low discount rates for companies like that. And I think you could probably argue that Tesla's somewhere similar. So
sure.
I'd be interested to see what it looked like if you were to, say, drop the discount rate to 6% and potentially even factor in some multiple expansion.
Okay.
I'm seeing Tesla trades about 200 times earnings at the moment.
So the discount rate down to 6%. Yeah,
but that's actually closer to my valuation also. So.
Say again.
And that multiple is way too low.
Okay, so like 420. No, maybe 69. 420 is a little out there.
This is good.
Jack, you forgotten the Bitcoin balance sheet, aspect.
Oh, right. So that would actually pump up the might pump up the terminal value even more if everything
excess
was in
capital
Bitcoin.
would I think you're missing a 0 or 2 on the excess capital. So.
Oh, right. Because it's sure, because it's not technically cash. Yeah. So if we go ahead and just make that, I don't know how much they have, but yeah, we'll call it 110 billion just to throw it on there. It won't change the valuation very much because it's really all about that future cash flow.
Guys, look at that margin of safety.
Oh man, mouthwatering.
30,000. Wow. Jeez. I mean, yeah.
That's like what Li Lu was getting back in college.
Not even. That's how much of a slam dunk it is. Yeah. So that's my best idea.
Imagine if that doesn't even make sense. That's crazy.
Yeah, it's actually insane.
Jack, I don't know how anyone's going to follow this.
Well, here, I actually I kind of have leveraged my position into it, and I've been actually buying. I'm trying to kind of space out my leaps on Tesla, or not even leaps, actually, just pretty far out of the money for now. But given their growth projection, I'm going for about these 24.50 strike price call options, long, expiring in mid-June. So they have a little bit of time to reach that, and that's just kind of a way to add a little bit of extra sort of ability to really expand these returns and just leverage them that much more. So I'm going to be sort of dollar cost averaging into options as we go along, and so far so good. I just started opening that position today, so yeah, that's kind of the future here for what I'm doing with Tesla, and it's probably my best idea.
Jack, I do have sort of one concern about this. I know you've got your what is it on your channel? You've got this Road to $1 Million Net Worth series, right?
Mm-hmm.
And
yeah,
I had envisioned that that'd be kind of slow, steady growth, and that the series would be like interesting to follow for several years. But I'm wondering if this kind of threatens that, and that that series might only have a week left or something.
Yeah, that I did think that through. It's kind of one of those like weird incentive things with being a YouTuber, and like, oh, do I want to stretch out the content? But like, when something hits you over the head like this, it's just you can't really pass it up. So at the expense of reaching those goals that much quicker and ending the series that much quicker, because it's obviously
you could always do Road to $1 billion, right?
At this point, if I owned a couple, because I'm using options, I'm able to get a pretty significant portion of the company. So probably own a few percentage points of Tesla at that point. So probably be well into the trillions. So it could be a lot bigger, but I'm trying to kind of measure dollar cost average my way into it. So yeah, it's definitely something I've thought of though.
Yeah, Hodo Prime has a really good view on this. I think you forgot to convert the balance sheet to Doge next year.
Oh,
So
that's
Of course.
that's actually a really good point. Because that would add like at least like a 40x upside on the first 5 years of free cash flow, just from the appreciation of the Dogecoin and kind of reinvesting those earnings. You could look at it sort of like a return on invested capital multiplier of sorts by putting everything in Doge. So you can kind of factor that into your discount rate as well. Just another layer of conservatism. So we're not the whole point of like a DCF. You're discounting the future. So it's adding conservatism in there, and it's a precise science. So it's not as though you have to really say, okay, this Dogecoin's going to reach this level. It's just kind of a broad range, and we all know it's going to at least 14x from here. So you can just kind of multiply Tesla's earnings from there.
In the chat, Manu just made a good comment too
Yeah.
about possibly Buffett investing in Tesla, which, considering he can only invest in a handful of these large companies, that does make sense when we're getting this type of margin of safety.
That's true. And also because just because of the market cap size, it's kind of one of those opportunities. Buffett can't be messing around with the $100 million market cap illiquid securities, and this is one that's very liquid. I mean, they're issuing new shares by the day, so there's always more shares to go around, and that makes it easier to kind of acquire more shares of the company.
Yeah, and
did
he
miss
really
a-
needs something where the downside is protected, right? And clearly we have that situation here.
Right. Exactly.
Yeah.
Yeah. But well said.
He
Manu.
should turn those buybacks off immediately and probably take a closer look at this.
Yeah.
We did miss a super chat from Tim agreeing with that.
Oh, we
multiple
did.
too, so
Tim. Yep.
Thank you, Tim.
Thank you, Tim. Yeah, we are
Thanks,
using
Tim.
the 69 multiple just naturally. It's and
Classic.
again, you could adjust that as you see fit, maybe down to the 40 or even up to 75, but 69 just feels like
I think it's
the
pretty
right
spot
spot.
on.
Yeah, it's the right spot. Yeah.
Yeah, the only other multiple I would consider is probably 420.69.
Right. That'll be earlier along in their growth trajectory. So, I don't know how much longer I can go. I've already kind of broke it a few times. Oh man.
Don't know what you're talking about.
Oh boy.
More believable than Tom's Charlie Munger interview, I think.
Yeah. Just in case, I don't know if we do have any other great ideas, but we could end it there. But I know, Tom, you were looking at a few things today. Like, did you have any other?
I mean, I was just putting in the private chat here. I don't know if I can match that idea, to be honest. That's a tough one to follow.
I mean, I've really just poured like at least like 25 minutes into this due diligence, and it's like that's all I needed. It was so clear. So yeah. And well said, Hoda Prime.
Yeah, the funding is secured.
Funding
Yeah.
secured. As it's coming in,
Yeah.
again, I'm dollar cost averaging. I've leveraged into the options as well. So adding an extra layer there of potential kind of return magnification. So it's been really good. All right. But
All right.
just in case we have any, I'll be nice. Just in case we have any folks who believe that was that was definitely not investment advice and was not serious either. Just in case.
Oh,
You're lucky the market's not open, Jack. I would have gone.
Yeah,
with one
I might
probably.
have single-handedly moved Tesla's market cap a few points. No problem.
Yeah.
Oh man.
All right. We'll see everyone next week.
Yeah. Well done. April Fools. Shall we do actual best ideas now? How do we transition? Do we transition into actual best ideas? Granted, I mean nothing's gonna top that.
Yeah.
What do you mean actual best ideas? I'm a bit confused.
Yeah, I get that. I get that was a serious case right there.
Yeah.
My base case of 69 trillion year 10.
That's,
Tom's multiple
we-
got me. That broke me. 420.6.
he was the way he asked it was so good. I think the only other multiple that would be appropriate, like 420. Oh man.
Well,
And this is gonna be one of those episodes that's gonna be legitimately good to look back on in 5 or 10 years and see where Tesla really is, because this could look
Ooh.
bad for us.
If we get a little hyperinflation and 69 trillion becomes the new million, like that could very well be it. Nominal returns.
Yeah, did any of us go back to last April Fools and calculate what our returns would have been if we had actually executed on those?
Yeah, Tom and I we had a really good position from I know from our videos. We both suggested Hertz. I suggested Hertz options. I would have been a little off on the timing because they announced like a merger buyout. Someone bought them out of bankruptcy. That was like just a couple weeks after I said the options were going to expire. But I said I was buying like way out of the money call options expiring in 2 weeks, and it took them like 4 weeks to find a merger partner. So I was really close. Tom's I think would have done even better with.
Yeah, I was yesterday. I was actually going to go and like create a share site portfolio just to see what it had done, but it was super complicated actually because I had like what did I have? I think Dogecoin. I had Sky TV, which has done like a reverse stock split, but it doesn't show that way on the stock chart, and I'm not quite sure how that would calculate. And then I mean, Hertz shareholders did go to zero, right?
They got saved.
Shareholders.
Yeah, they got saved. That's what made it so ridiculous. It seemed extremely unlikely. They were way underwater, but some savior came in and bought out the company and eliminated and basically propped up the shareholders again. So everyone got saved. It's just incredible. And they're up way up from their lows because everyone thought they were dead, including myself. So
I mean, I did have Nikola. Looks like that's down 20%. I think I had GameStop as well. Actually, what's that done? Down 11%. So not bad, really.
It's really flat.
Could have been worse.
I guess from that recent surge, really.
Yeah,
you could have been a Baba shareholder. Could have been worse.
Didn't you?
Yeah, true.
Didn't you have? Yeah, actually, didn't you have another like crypto in there?
I think it was just Doge.
It
was like just Doge, Sky, Nikola, GameStop.
Yeah, that sounds about right.
And Hertz. I think that was the 5.
What a wild world.
Yeah.
Did you guys see? Did you guys see the Plain Bagels NFT launch that he did today? He called it like bagel butts. He changed his I could actually show you his Twitter. Actually, it's on his website if I'm not mistaken. But he did an NFT drop, and here's his collection. It says, click it calls them bagel butts. Click the bagel butt you're interested in to open the payment page. And it's actually like charities. Yeah. So it's a charity. So you pay there. And then after payment, right click the JPEG and save as to your desktop. That's how you buy them.
That's pretty good.
Good stuff.
I think Hatch yesterday rebranded themselves to Patch and had like an artificial intelligence eye patch or like some sort of implant that picks stocks for you. That was pretty good. Yeah.
With Plain Bagels and NFTs, I'm waiting for someone to actually like take them all and make them into quote unquote real NFTs and start selling them. It's going to happen if it hasn't already. Yeah. Good. Again, what a wonderful world.
Yeah, I'll mention one. So I just read Phil Town's annual letter. I'm a little late on it. I think it came out the end of January.
Mm-hmm.
And I noticed, I think you probably pointed this out too, Tom, that Phil Town has like 50% in cash. And so my pick was going to be cash.
All right.
In Phil's, it's a controversial call, but in Phil Town's letter, he kind of goes through why he thinks, we are in for a world of hurt in the markets. and kind of lists all these different sources. Inflation, real inflation, he thinks is around 15% based on some data from shadow stats. You get the money supply just taken off exponentially. So he lays out all these different reasons he thinks.
Yeah, this is his report, and
the market's going to tank.
Yeah, there's the shadow stats.
And
inflation.
what I thought was interesting, so he really builds a case for inflation. And then later in the report, he talks about his portfolio. He says, our 34% position in cash returned 0%. I was thinking to myself, wait, so you just got done telling us, we have like 15% real inflation here. And you're going to say cash returns 0? No, Phil. No. Cash returned minus 15 if you're going to make this argument. So it's really interesting. Charlie Munger, when was it? The Daily Journal meeting, somebody asked him about, sitting in cash on the sidelines. And he said, yeah, I've never done that. I've always just bought the best thing that was available, because cash, it just feels, there's that risk to it from inflation, right? If you're not going to deploy it in a reasonable time frame. And the game that Phil Town is playing here just strikes me as a little bit risky. I know he feels like he's playing it very defensively, but it'd be interesting to hear his take on sitting in cash with such a high rate of inflation. What do you guys think about that?
I think I asked you before the show, Brad, because you'd pointed that out. But does that account for what's tied up with options? Because you need collateral for that.
I don't know how much of it is involved
with
I'd wonder. This options strategy. I'm not sure how to find that. Tom, have you looked at that at all?
It would be in the annual report. There'd be some sort of liability section you could find in the. I think they have like sort of a balance sheet. For the fund.
Okay.
But I think from memory that would be reasonably minor. And the part of this you actually didn't mention, Brad, is that he has 35% in cash and I think money market funds or something. But he also has like, I don't know the numbers off the top of my head, but at a guess, maybe like 10 to 20% of the portfolio in gold and silver, which is probably a bit of a cash alternative for him as well. So Brad, are you recommending cash as sort of a long-term hold here? Or?
That's my play right now. I think it's going to outperform Tesla.
Hold up. So,
Jack, you're still here.
I mean, I get the argument, like that they're printing more and more cash, so like you're gaining more cash, right? So it's sort of like Tesla, you're gaining more shares as they print more of them. So like that's like a return in itself, right? So
yeah, it's like they're stock splitting cash effectively.
Yeah. I like that.
Yeah. The only difference is when they do the stock split, like your dollars don't get split. You kind of just still have your amount of dollars and everyone else gets the new split shares, right?
It's like a hack.
Yeah.
Dollar's still a dollar, but now you have more dollars. So it's infinite money.
Yeah, so think about that one, guys. I think that should be a sizable position in the portfolio, that cash.
100% cash till you die?
Well...
No, 50% cash?
50% cash. I like the 50 cash, 50 Tesla.
Until you die. Like just hold long cash.
Until I hear a better idea, 50 cash, 50 Tesla. Yeah, that's like a coffee can approach, right?
Sure.
Yeah. I want to know what Mrs. Duffley thinks of these investment ideas.
Yeah, let's get Mrs. Duffley in the conversation here.
I wonder if we've lost her.
We may have. Maybe too much for her.
I think she just run out to buy some Tesla. Probably.
I've got my family office. We invest in Tesla exclusively.
Sven's getting a little impatient here, guys.
Yeah, we're at the half-hour mark. Shall we switch into real mode?
I think if Sven wants a real idea, I think I've got a real idea for him.
Okay,
Yeah.
Karan.
Yeah. So, Brad, when you go into cash, right, it's not good enough. I think we really need to step it up, and we need to look at a broader thing, something like a SPAC, right? Because
Right.
the SPAC, the best idea that I've got is Pershing Sweat on Green Holdings. With inflation, you can only lose money at 15%. Pershing Sweat on Green Holdings can beat that number, right? We've got the inflation, plus we've got Bill Ackman tweeting. That turbocharges the returns.
Didn't he just say he wasn't going to be doing that anymore? Some news just came out where he was going to step back.
I know that hurts results in the long term, but right now we're in deep value territory, right? So
Deep value cash. Deep value cash.
That's a fair case you make.
Why buy cash when you can buy cash in a cage?
they
Right. That's kind of what it is.
Yeah, I think I read that on Value Investors Club one time.
Yeah, that sounds about right.
I think there was some guy called Will Sackman who kind of had that on Value Investors Club. So
Right. Right.
Will Sackman, I think he's got potential.
Good.
Yeah. So SPACs are the future. You've got inflation.
I like that better than just cash, Brad. Like, no offense, but it's kind of like an upgraded cash thing. So like, it's just a better version of cash.
Plus, you've got management to tell you that the cash is gaining value at
Right.
15% per year.
Right.
So of course, that reporting, the SEC filings, the dealings with the SEC, they all add on, to the benefit that you have. So,
Have you? I'm assuming you've followed like Chamath and like what he's doing.
Chamath, man, that guy's legit.
He's kind of like the SPAC master.
Yeah.
And like he's printing fees because they're doing so well. Like, it's well deserved. So like, is that kind of what was your initial inspiration, Ackman, or was it kind of looking at the Chamath model? I don't know what brought you into SPACs.
so Chamath thinks on a very small scale, right? I mean, he's only ruining like say 400, 500 million at a time. Ackman just went for like 4 billion, like the largest piece of
Sure, that's fair.
value that we can find.
Right.
Yeah, that's what Ackman's able to do. So when you're going big, when you're doing it, go big. So
Right.
So Ackman's a man, yeah.
Yes.
I like that.
Yeah,
That's well
I
said.
think he's going to explode.
Hey, guys, should we be voting on these stocks?
Oh. Should we pull up our portfolio on the share site right now?
Yeah, let's see how. Let's see how. Yeah, I could pull up the share site right now.
These ideas are probably outperforming.
Yeah.
Say again.
I don't know. I don't know what we're doing with KPG in there when we've got cash or. Yeah.
Let's see. Yeah, like I mean, right here. I mean, these returns are about in line with cash. So, and cash is a less risky asset,
right?
Theoretically. So like it seems about right. We probably should have just gone all cash. Just less headaches in the meantime.
The Punch Cup portfolio had a rough start, didn't it?
Yeah,
I mean, it still hasn't been very long, but it's
still
had a
pretty
rough start. I think I think if you were to look at this calendar year, we're about in line with the index. I want to say, but we came out the gate pretty poorly. Like if you go up to where it says since first purchase, Jack, and go calendar year, top left. Where are we at?
Pretty even.
Yeah.
A little down. I mean, it's really testing our gut here, right? I mean, this is what we want. We want to be tested.
Or Prosus. Prosus is outperforming cash. by pretty wide margin.
Is that outperforming PSTH or?
I think PSTH has been pretty flat recently, but yeah, I think they had around that kind of a drop when they pulled out of that UMG deal because they preferred to keep the cash rather than actually go through with the deal.
Right.
Which makes sense, yeah, of course.
Yeah.
Okay.
Highly rational.
Well,
Sharesite.com /
That's
punch
the
card
takeaway.
investing.
That's the takeaway here.
Yeah.
where you can get a discount on ShareSite portfolio
And you
tracking.
can save your cash and then
Yeah, you can
invest
see
that
if
in our
you're
good
beating
ideas.
cash or not. It's that simple, and that's in the description below as always. Frank, you've been awfully quiet. I don't know. Have you?
Yeah.
Have
you
you
got
learned
another
anything?
KPG up
Like,
your sleeve, don't you? What's going on over here, Frank?
I just can't take anything seriously right now.
I get you're on your high horse, like, I got KPG, I don't need to do any more due diligence. But I mean, this is what it's about, Frank. This is what we got to do. You got to do the digging. You got to find these amazing opportunities.
We might need to put Tesla or something in the portfolio.
Yeah. See, now we're
I
talking.
think let's vote on that at some point.
Yeah.
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 Hey, Frank, would you call cash a microcap? I know you're a big microcap guy.
Oh God. I got nothing.
Okay.
Oh man. Yeah,
okay.
Manu has a point. Should we do an April 1st portfolio? Just to track. I'd kind of love to.
Probably.
So Tesla, Pershing Square Tontine Holdings. So that's going to be wrapping up
Cash.
soon.
Also,
Yeah, I guess just cash. We'll leave 20% in cash. So cash.
I'll short Google for my position.
Tesla, Google short.
Ooh.
Okay, we need two more.
Interesting. I was going to do Air New Zealand because, very capital light, high return on capital.
Right.
Business doesn't need capital to grow. Lots of pricing power. So that was going to be mine.
Okay,
Hmm.
so that's 4. Brad or Kron, like, it's kind of up to you for the last one, since one of them is cash / a SPAC, but probably cash would be easier for a long-term hold. What should the last one be?
Pershing Square Tontine Holdings.
The only reason I'm worried about that is it might unravel. I guess if it unravels, we could just convert it into cash. So it'd be 40% cash, more in line with kind of what Brad was saying.
I mean, maybe we should put Nikola in there. Just
Yeah, that's now we're talking.
That's good. Yeah.
Yeah. Okay.
Yeah.
So Nikola, Tesla, Google short, 20% cash, and Air New Zealand, and there.
beautiful.
Okay, that's
Guys,
all right.
I'm literally creating this portfolio in ShareSite as we speak. So
Absolutely smashing. And we'll reconvene a year from now and see where we're at.
I'm gonna have to look at this thing every time I log into ShareSite.
And watch it destroy your existing portfolio.
It's gonna taunt you every week.
Yeah, maybe I'll add it as the benchmark against my portfolio. Is that something you can do in here?
What do we call it? Should we give it a name?
Stonks. Yeah.
I've
Punch
already
card
called it
stonks?
Punch Card April Fools. Can I change
No.
it?
It's got to be more serious than that.
Oh, yeah, I can change it. What do we got?
I was gonna say like Punch the Moon or something, but
Punch the
You guys, we
Moon
don't-
420.
We don't have
Yeah,
any
that's all right.
crypto. Can you put crypto in there, Tom, or no?
I think you can. I've never tried.
Yeah,
but
I think they do.
Punch the Moon 420. Are we locking that in?
yeah, that's all right.
Okay.
Yeah.
What should our management fee be?
Or 4 and 40 probably.
Okay, that's about in line with the market. So yeah, that's good.
Yeah.
Well, didn't Jim Simons have a management fee higher? It was like, maybe it was about that.
I think it was about that. Yeah.
Okay.
4 and 40
Yeah.
sounds reasonable. Yeah.
You could always do 50 and 50.
Yeah.
Ooh.
Yeah. Just like half the portfolio every year. Like if we're
No,
quadrupling the portfolio every year,
Yeah.
like you're still making a handsome return. So yeah.
Yeah. Half of
Okay,
take
hold-
half
hold-
the portfolio for management and then
Hold
half,
up, that's it right there. That's it.
Punch
right
drunk.
there.
That's great.
That's it right there. fun drunk fun. Well said, Matt. Tip of the cap to you for that one.
Matt is our new PR person for the Punch Drunk Fund.
Yeah, you want to be head of marketing? You can share in some of our lucrative fees.
You want to raise some money for us?
Yeah, I mean, we have a good product.
Time will tell.
I think he was talking about us back.
All right, shall we transition into being slightly serious? Actually serious. Like,
Can we salvage this episode and
serious?
get a good
Can we
idea?
get like one or
Go for
two
it, Frank.
actual best
Salvage
ideas?
the episode.
And
Just
we can
one.
we can continue the real best ideas into the real next best ideas into next week as well. So you can kind of get started now.
Does anyone have a legitimate best
Well,
idea?
I
they
thought
can
Jack
throw out?
had a legitimate good best idea. A best.
You think it's
idea.
good? Oh, well, thanks.
Well,
Brad.
it's your best idea. I won't say it's good.
Yeah, it's
I'm
enticing though.
Sorry, guys. This is a tangent, but I'm putting in the number of shares of Air New Zealand to make it $10,000, and it's 11,420.
Yes,
That's what it works out at.
Oh, it's meant to be. It's meant to be. Absolutely meant to be.
You
Is
can't
that round
swap this.
enough for you, Tom? Does that satisfy you?
It's $10,000.59. I think we can manage that.
Okay.
What a day to be alive.
Jack, did you say you had something over there?
Yeah, sorry. I'm just putting in the chat some of our members in this fund.
I see.
So we have Bill. Bill Huang will be on the board, of course, to kind of head up our financial.
He's
sort of
really
leverage.
proven himself. Yeah.
He can leverage the portfolio pretty quickly. So we'll use him and his skills, and then Bill Ackman can obviously be the PR manager.
He's a smooth operator right there.
He's really he has a real knack for, just getting the message out there, and he does it effectively. So yeah, he's going to be he'll definitely be head of PR.
Good.
Yeah. So the fund is in a good position. The Punch Drunk Fund.
Excellent.
Hey, Frank, you don't have a second best idea by any chance? We can't do shorts in here.
I was wondering if shares.
Oh no.
Oh, is there an inverse fund of like Google or something?
There's a 3x inverse, but apparently it's been delisted, so I can't get that anymore.
Do they have cryptos? Can we get Cumrocket or something going?
Good lord. Okay.
or Doge. I feel like Doge will have a longer life.
Anyone know the ticker for that one?
It's got to be CUM. It has to be.
No, it's CUMMIES, if I'm not mistaken.
I hope your mom went to bed, Jack. That's all.
Sandeep says ARK, but ARK would be a good way to kind of double the Tesla position.
I'm going to have to go incognito to check the ticker on this one.
Boy.
Should we take questions? Are we going to do any real good ideas?
Yeah, any questions at all,
here?
please.
Someone help us.
I can do one. I can do my one idea that we're kind of talking about it.
Oh no,
Guys,
my mom is still here.
Still here.
My mom is still here. Fantastic.
good.
Man. Anyways,
this is good.
My best idea, my best real idea was mentioned it at I know that Jason, our friend Jason, is not going to like this, but I think
okay.
Right now I'd probably have to give it to Foot Locker. It's not like it's a screaming deal. Like there are clear risks with this, but it's a buyback, short-term kind of focused position in that we've heard the negative news about Foot Locker and that Nike is moving more towards direct-to-consumer. Now, they're not pulling out of Foot Locker immediately or anything like that, and they've kind of reiterated that they want to keep their relationship with Foot Locker because Nike makes a lot of sales through them. Foot Locker relies pretty heavily on Nike. So it's still negative news regardless, and investors obviously don't like it for good reason. So they're down to a $2.8 billion market cap.
What kind of
And-
buyback program they got going on, Jack?
Yeah, I was going to get to that in just a second, but they just announced a $1.2 billion buyback program. And if you actually go to their if we go to their balance sheet,
Wow.
they've been buying back shares pretty aggressively over the last few years. You had 131 million back in 17, and they're all the way down to 96. So they've been buying a lot. So that's one way they're returning value to shareholders, while you kind of have this sort of, dare I call it, like a falling knife effect with the Nike revenue decline, if that does really happen in a big way. But
They're
cash flows,
basically at a 10-year low right now. That's pretty
Yeah.
impressive.
and again, it's not without reason. So there's clear risk here that it's a proper secular decline that goes, goes further and further. Because right now free cash flows are at something like 500, 450 $million, which is down from a really good 2021 and pretty similar to 2020. So if they can kind of maintain this, or it's slowly declining as they might lose sales with Nike, which again isn't a guarantee, but it seems kind of likely. As they're bringing in this money, returning it to shareholders via buybacks and a pretty significant dividend, that's kind of where you're getting your return. It's up front. At least that's how I'm viewing it. So as long as they can kind of maintain or just not lose all the revenue too quickly and continue to give it back to shareholders through buybacks and dividends, like there's something there for sure. Because when you got 500 million in free cash flow at a 2-point-something billion valuation, promising 1.2 in buybacks, not that again there's a chance that doesn't go through, of course, but that's what they're planning on.
It's quite a setup.
Yeah, like there you can see that there's some clear upside. There's some clear downside as well. So it's kind of whatever you're feeling there. But that's the idea I've been looking at. I added some money pretty recently, right when it actually did that pretty significant dip. Or actually, real quick, I want to take a look at their balance sheet. How much cash do they have?
I noticed they made the magic formula pretty close to the bottom there. So,
which makes sense given their earnings. Yeah. And I think they've had a pretty good return on invested capital, double digits. All things considered, given that they're like a retail brand, low margin type business. Sorry, my ticker is going really slow all of a sudden. All right, here we go. Financials, balance sheet. We've got about 800 billion in cash. But they have pretty significant debts in the form of capitalized leases of like 2.4 billion, and about 400 million in long-term debt. So if you just say they pay out all this cash in buybacks, 800 there, if they bring in another 500 in cash flow, there's your 1.3 billion, and that could make up kind of your next year of buybacks if they were to put everything towards that, which they probably won't. But that's kind of where a lot of the value proposition is with Foot Locker right now. It's kind of how much do you want to discount the Nike sell-off, and how much do you want to sort of factor in their capital allocation decision of buybacks and dividends, basically.
What was the $1 billion acquisition they made? I'm just looking at their cash flow statement.
That was of, wait, which brand was that? They bought a couple brands. I want to make sure it's the right brand. They're international. I think one was in Japan, if I'm not mistaken. And a lot of people don't really like those deals because it's kind of like, why are you doing that? Almost like a diversification. Foot Locker brand.
Because they essentially went over 10 years without making any acquisitions, or very small relative, like $81 million here and there, to a $1 billion acquisition. So,
yeah, it's like I think it was their move to try and internationalize a bit more because it's very U.S. centric. Here's your Atmos, and then here's the one I was forgetting, WSS. Here's like an article for you. So it like you could see some reason for it, but it's a bit strange. And what comes of it, we'll see. But really, it's the core shoe business. That's the main thing. I get these.
It'd be interesting to dig into the management incentives. If there's any behind that acquisition.
That's true. It doesn't seem like a particularly great move, especially in hindsight. But yeah,
I'm just curious as to why they would do, rather than a special dividend or even a buyback with that $1 billion. Considering they have a history of buybacks as well, I probably would have been better to see that money go elsewhere. But maybe that's without knowing whatever this WSS business is. So
Mhm.
maybe understanding that would change my
I
opinion.
believe WSS, was that the one in California? It's like a West Coast kind of sort of athletic fashion brand, if I'm not mistaken. I might be mixing that up with Atmos. WSS Locker. Sorry, I'm kind of like I'm trying to get like a good quick description.
So you do own this Foot Locker, Jack?
Yeah.
Where does it rank in your conviction in terms of your positions?
I don't really want to add too much more now. I have like what I feel like is kind of a mature position. Like I don't really want to add much to it now. It's I think top 5 by size.
Wow.
And I don't really know if I want to do much more because there's clear downside risk here with the secular decline of the business and how bad that gets. And it almost seems like as they're bringing cash, they're buying more and more of their shares, so that kind of like negates the fall, but it doesn't create a rise. So you might get pretty flat returns for a while. But again, time will tell. It very much depends on how much you want to factor in decline. Of course, if we get a recession, that's going to hurt in a big way. But yeah, we'll see.
Kind of seems like buybacks in a dying business.
Yeah, exactly. So the
Kind of
question,
like GE, pretty much.
but if the buybacks are massive enough relative to the market cap, like it could be a pretty big, they could be a pretty big deal. But that is the general kind of bear case. It's like
How
you're
do you
throwing money
view
at
it
it.
compared to other stuff in your portfolio? Like, would you rather have more money allocated towards an existing position rather than putting it into Foot Locker?
I kind of like the balance I have with it right now, but I'm not excited to add more to answer that question, I guess. Yeah. I think Bobby puts it well. It's a bit of a cigar butt.
Cigar butt, a Ben Graham throwback. Huh?
I think it's a little bit higher quality than a true cigar butt, but it does have those characteristics for sure.
There's a couple puffs left. Let's give it a couple.
Yeah,
puffs.
right.
There's
There's a
if
lot
they
of red
didn't engage
flags.
in so many buybacks, they would be a cigar, but because they'd actually have a decent cash position relative to their
Yeah, maybe.
market cap.
Hey, you got 800 million in cash to a 2.8 billion dollar market cap. That's a pretty significant chunk.
Yeah, but they would have had like 2 billion in cash
Yeah,
for
true.
2 billion market cap, which would have.
I kind of see it as like almost like a medium term sort of hold. Like I don't see myself holding Foot Locker for 15 years, but I could see maybe 5, or even less. It kind of depends on what's going on with buybacks and how much they can keep those cash flows up. Yeah. So and maybe I could be like Trader Monish, just get in, get out, and see what happens.
You might have Ryan Cohen like get into Foot Locker next.
Yeah, right. To turn
He
it
got
around.
into Bed Bath and Beyond also, right? Ryan Cohen.
Did he?
Yeah, he
Should add that to
announced
our
something.
portfolio. To the
His
punch
portfolio
drunk.
is GameStop and Bed Bath and Beyond. So
Do you know anything about the price they paid for that acquisition and kind of what they expect to generate in cash flow or anything?
Yeah, here I have. I'll actually put it in the in our private chat. Frank, if you want to take a quick look. Yeah, WSS is the one in like Southwest US, and then Atmos has a lot of like Asia Pacific sort of, which is like totally out there for what Foot Locker's doing. So I'm trying to navigate tabs in the chat at the same time. So sorry, I can't get you like.
Should we speculate about why Pabrai got out of Seritage?
Sure.
Is that a game we should play right now?
If you want to, is that a best idea, Brad?
No. Somebody asked in the comments. So.
All right.
I mean, he still has a little piece of it, right? But he's mostly out. I think. I'm just going to throw it out there as an opportunity cost thing, but who knows? I asked that question on Twitter. Actually, I see Stig's getting him on the Investors podcast for an episode coming up soon. So
Right.
I don't know. If we're really lucky, we might get that that question asked to him. But
Well, we know he's
Not
been
holding my
investing in
breath.
Turkey, right? So
Yeah.
yeah,
that's also a big part of it.
I'd imagine that's his answer. It's going to be, I saw a better opportunity elsewhere, so I sold. Or
How
something
is
like that.
Racist doing? Anyone tracking that? Or-
I just looked.
Yeah, we looked a couple
Um,
episodes ago, and like the dollar versus lira returns, and how stark they were.
Yeah, he took money out of Alibaba, put it into Process. Process current, I mean, dropped a little bit, but that's doesn't mean much.
He's had a lot of hypocritical statements recently, old Manish.
Seems to be the case.
It
Yeah.
feels like ever since he talked about this long-term compounder type approach, he's been more active
Yeah,
in short-term than ever.
yeah, it is awkward.
Mhm.
The
Takes a lot of
spawner
moves
framework.
to move a aircraft carrier, right? That's how you put it.
yeah.
So it takes
Yeah.
a lot of moves, I guess.
Maybe.
Well-
We'll give him a year to sort it out before we before we make final judgments.
So he
Yeah,
bought and sold Baba, right? Baba was the tax loss harvest thing, and he found something that he thought was better.
Still a little weird, but
Seritage-
yeah.
Seritage, he never planned on owning for that long. It sounds like that was before the whole Nick Sleep framework.
but
he
in
did
the
say
last
he had a-
podcast, he said he had a 10-year view.
Yeah, that's what I was going to say.
Yep.
Yeah, I think maybe he was trying to talk himself into that. I don't know.
I don't like when he said that like Facebook is a double in the next year or whatever, and it's like, wait, so
2 or
it's a
3
double.
years. 2 or 3 years.
Okay, still 2 to 3 years. You're like, so you're telling me that this is a like easy snap of the fingers double. Like, why not go into that? It's just
Yeah,
I don't
that's
get the
like
mixed
the
messaging.
Facebook's core business is a double, right? He didn't talk about everything else, which is what the future.
But if he truly
Still.
thinks that, he should own it.
Right.
Like,
Well, the
without a
implication
doubt.
is that he's not buying 50-cent dollar bills anymore, right? He's pivoting towards these
Well,
100
he-
Still,
He probably thinks he has an easy triple or 5x or something.
maybe it's just weird messaging. That's all.
Yeah, I mean, I must say, I agree with a lot of what you're saying, but I must say, I agree. I admire the ability to not sort of confirm all your biases by saying it out loud, like having the mental flexibility to change if your thesis has genuinely changed.
Yeah, you do appreciate that he doesn't care enough to be like,
No.
oh, I said I would hold this, therefore I must. So yeah, that is true.
Yeah. But I would say a Guy Spears sell is much more meaningful at this point to me than a emotional buy sell.
A Guy Sphere move at all.
Yeah.
Any move, buy or sell.
Yeah.
And plus, he was on your podcast, Tom. You guys are your buddies now.
I don't know about that, but
Are you going to see Pabrai
When
in Omaha, Tom? And any possibility of that?
I don't know. I mean, I'll be in the line early in the morning. That's the one place you see him, isn't it? So we'll see if the rumors are true, I guess.
Yeah.
I've created the Punch Drunk Fund in ShareSite, by the way. It's ready to go.
Nice.
Can you share it and I can
Yeah,
show it
it's
off?
ready to go.
Maybe we can do one more best idea, real best idea, and then we can wrap up.
Yep.
Anyone wants
I
to
did.
volunteer?
We were talking in the private chat a little bit here. We're up to Frank's third best idea, which is ARC. So that's the one that's ended up in the portfolio.
Because we couldn't do the short.
Yeah.
Fair. All right, here we go, Tom. All right, here it is.
What has ARC done over the last 6 months or so?
I can't imagine it's good.
I mean, are we buying it in value territory right now? I guess that's the
Deep
concern.
value, yes.
Deep
I
value.
mean-
Down 37% last 6 months.
Okay. I still feel good about buying it then.
Yeah. So Punch Drunk Fund and Brad, I've just put the short-term bond ETF as your cash alternative, by the way. Some of these share counts worked out nicely. We had 11,420 for New Zealand. We've got 169 for the cash position. They're not exact, but roughly $10,000.
Can you zoom in a
so
bit, Tom? It's a little hard to see. There we go.
They're better.
Yeah.
Beautiful.
So yeah, we'll see how this bad boy performs over the
Excellent.
next year.
Thanks for setting that up, Tom.
I would love to see it just like crush the actual punch card portfolio.
And probably
happen.
wouldn't surprise me.
It could happen. Anything's possible.
I'm curious, James. Highlight James here. When was this interview with Cliff Sosin recently? Was it the one from 2019? Because if he's got a more recent one, I would love to check that one out. Yeah, Vinal just put out his annual meeting, which was solid to watch.
Yeah. I think Andrew Brown went to it, right?
He did.
Who has a YouTube channel here. That's pretty
Yep.
cool.
Yep.
Seb Fox says, "Imagine if the joke portfolio beats your main
Yeah,
portfolio."
that's what I was just saying.
I mean,
it could do it. It could do it.
Absolutely.
You get any one of them, there's just some like meme run up, like.
Well, or our own portfolios all crash and burn, and
Yeah,
that
that too.
cash position is just
actually holds.
hanging in there.
It'd be hilarious.
Yeah.
All right, we should do one more best idea. We're at an hour, so let's get one more actual best idea, and then we can do the remaining 3 for next week.
Well, I've got one. I don't know if I'd call it a best idea, but it's one I've been looking at, and I know some of you have done various levels of digging on this one, so keen to just throw it out there, which is Naked Wines. So it's a Norbert Liu investment from, I think, very early 2020. I don't have the exact numbers in front of me, but he's bought it at some like crazy different prices. Like he bought it. Let me bring up the current stock price actually. Yeah. So 362 GBX. Oh yeah, that's in GBN. Wait, what's the price?
$350 million market cap, right?
It's taken a dive.
Why am I seeing a different stock price to you, Jack?
I've got that on dollars.
Oh yeah, can you go to Great British Pounds?
Yep.
There we go. So he Norbert Liu bought very early 2020, I think potentially as low as like 2 Great British Pounds.
Is that right?
And looking at some of the filings, I believe he purchased, this might not be exact, but somewhere in the range of like 7 Great British Pounds as well.
Ouch.
Which would have been about 12 months later. And I think he owns something like 8% of the company now. He's a pretty big shareholder. So,
yeah, Jack, click on the shareholders or the owners tab.
Yeah, the ownership down here.
Because Conifer's in there as well.
Which is Greg Alexander, right?
That's it.
Yeah, 12% shareholder. Oh no, 14.
That's punch card.
Wait, sorry, 9% shareholder.
Oh yeah, I was looking at 12 too. Yeah.
Yeah,
9%.
Yeah, so he added 12% to the position in October 2021.
Yeah, it would have been October or sometime before October, I think, or maybe in October. Yes, around there.
So that was in the £6 to £7 range.
Yeah,
looking at the stock chart here. So yeah, really interesting. So the business, basically, for anyone that doesn't know, they actually, my initial impression was that they're just a online sort of subscription service for wine, shipped to your doorstep kind of thing. It's a little different of a business model to that. So I guess the whole kind of underlying thesis behind Naked Wine's moat is that there's a lot of kind of money just going into stuff that's not the kind of juice in the bottle when you buy a bottle of wine from a grocery store. So there's like a huge percentage of it is just basically marketing, and there's several layers between the actual vineyard and winemaker, between actually getting it to a retailer, and there's kind of people making a margin the whole way along. So Naked Wine's basically going in and working directly with the winemakers, and the prices will vary depending on what kind of bottle of wine it is. But they're effectively trying to say that they can, supply higher quality wine at a lower price is kind of the idea. And the business model they've wrapped around it is a subscription service, but it's not a very typical one, I would say. So rather than paying for like a box of wine to turn up at your house every month, instead you basically have money automatically coming out of your account that would go into almost like a little piggy bank with Naked Wines, and then you can go ahead and kind of spend it when you want, essentially.
I'm looking at their cash flow statement right here. Looks like they're kind of hoarding inventories, or they weren't able to sell as much, perhaps.
Yeah, so if you look at the revenue growth over through COVID was a huge tailwind for them, and the
Yeah,
reason
clearly.
the stock's down so much is people just don't know what it's going to look like out the other side of COVID.
Yeah, revenues are stable, but yeah.
Yeah, I would also say we're really only looking from 2019 onwards here. So there was like a reverse merger of some sort. They basically had like a retail arm, traditional retail arm, and then the online kind of Naked Wines business we know today. So it's been just purely the online business from like 2019.
Gotcha.
So yeah, it's pretty interesting. The other
It is.
thing that is kind of a strange one is, I guess, like a lot of these subscription type businesses, you could sort of make the argument that a lot of their capital expenditure shows up on the income statement. It kind of depresses earnings. So for Naked Wines, that's really marketing. So they do like a breakdown in the annual report of a metric they call standstill EBIT, which is essentially intended to say this is how much money we'd be earning if we just wanted to maintain our subscriber base. And I'd have to look at the figures, but if you use that as like a proxy for earnings, the earnings yield's like through the roof at current prices. So yeah, I don't know if people have thoughts on Naked Wines so far, but it's an interesting one I'm digging into.
It almost strikes me as a coin flip. It's like, does it go up? Does it go down? Sort of thing.
In what way?
Like was the COVID era a fluke? That sort of thing. Which is a valid concern
it
for
was a
a
huge
lot of
tailwind.
online brands.
Yeah.
Like it definitely helped, but then it's like, yeah, like you were saying, it's kind of like how much of this is really going to be sustained.
I'm just sending through something now, Jack. It's Elliot Turner's write-up on Naked Wines from 2020, which is around when he first invested in the company, and his price target was £22 per share. And at the time it was trading at 6.8. So if you read through that write-up and you agree with some of his assumptions, the upside is pretty incredible. I'm not sure if his thesis has changed on that. As far as I know, he still owns the company.
What were the growth assumptions? Do you know?
If you scroll down, you have to have a good scroll. You'll eventually see like a DCF type table. But in there, keep going. It's a little bit below where you are.
We're almost there.
Yeah, just underneath where you are right now.
Oh, there it is. Oh, here we go. DCF. Okay, so
yeah, and if you go down a little bit more, keeps going just to the bottom there. There you can see his price target in the bottom right at 22.4. But yeah, I looked a while ago when I first heard Elliot Turner talking about it, but the unit economics were really hard to understand. I think it's a pretty complicated business model. I believe they have pretty good margins on like reoccurring customers or like repeat customers, but not so much on customers that they acquire because it's a pretty high acquisition cost on each customer. It's really those angels or members, whatever you want to call it, that are the appealing business model. But yeah, it was just a really complicated one for me to understand, which is why I ended up passing. It kind of seemed a little bit out of the circle. And it was kind of, when I was looking at least, I was worried that a lot of the earnings had been pushed forward because of COVID, which obviously was true. But I think maybe now or over the next year or so, we might get to see a more realistic look at the company, because obviously the growth through COVID was exceptional, and share price followed that.
He's assuming some pretty large free cash flow growth over the next few years in this model here. Like we're going from 10 to 28 in 4 years. That's a pretty big jump.
Well, that's a negative 10, isn't it?
Yeah, true. -10 all the way up to 28.
Yeah,
So even
I
bigger.
mean, it's if you look at the the revenue growth won't be anywhere near the kind of free cash flow
yeah,
growth. Just
it's clearly because like
diluting the
they're
cost base a lot. Yeah.
yeah.
Just one thing I've just brought up the most recent investor presentation just to, so this will give you a brief feel for why there's a lot of value type investors interested in it. So again, take this with a grain of salt, but the metric they call standstill EBIT for the first half of the 2022 financial year was 37.2 million Great British pounds. So bear in mind that's only 6 months. The current enterprise value is about 200 million Great British pounds. So if you believe that number, that's a monster yield and potentially growing at a reasonable rate.
Yeah.
Do you have any like what kind of rate of growth do you expect on something like this, Tom, or you haven't got that far?
That's why I'm really struggling. I just don't know. I mean, if you look at the financials, like I say, it's really only 2019 as far back as you can really go. Maybe you can go back further and try and try and sort of split out the business. That's not an exercise I've kind of dived right into yet.
Is 2019 when they sold off all the brick and mortars?
Yeah.
Yeah.
Or I think those stores might still be around doing something. I'd have to check that. But yeah, that's a separate business now. So we really can only go back to 2019. And then we've got this huge tailwind from COVID. And they're expanding in the US. They're reasonably mature, actually, in the UK. So that's an easy one to get your head around. But yeah, lots of unknowns.
And what about, say, like a competitive advantage over any other company that wants to do this? I know in Australia we have a couple. None of them look appealing in the investment sense, but as a kind of user, you could get the exact same. It doesn't seem any different from the user's kind of perspective, I guess.
I think the competitive advantage people are arguing is just the low cost nature of their business model from working direct with winemakers. And they've done a reasonable job of proving that in the UK. But again, that most of the growth is going to come from the US. And I'm struggling to get my head around why someone else with a lot of money can't come in and do the same thing.
Yeah.
Or why I don't know, even why
Amazon.
like a Costco can't
Right.
do something like this.
That's what I was thinking.
Amazon could.
I don't know if Amazon would.
can do anything.
Yeah, Amazon. Yeah, I guess they could through their Whole Foods network as well. But yeah, I was thinking Costco for like low cost. Matt says, "Don't put Naked Wines in the punch drunk fund." Well said.
Naked Wines could be one that is worth digging deeper in an episode and maybe voting on. I think that is pretty appealing, at least somewhat. I haven't done the research yet. I'd want to know more before I made a decision, but
there's a clear upside case for sure.
Yeah, I mean, if that standstill EBIT is like remotely close to reality, it's like well north of like a 30% yield, right? And potentially growing at like, a double-digit clip.
Yeah,
as well.
So if this is a $200 million company or whatever that is in US dollars, how much does Norbert Lu own? Does he own a big percentage of this company?
Yeah, he's at 9%.
9%.
Okay.
And I don't know how much of Norbert Lu's fund that is.
I was going to say relative to his portfolio.
We could
he doesn't own many.
That would be a little under $35 million US dollars.
Yeah.
So significant chunk.
Yeah, I mean, it's hard to say if there's other international stocks we don't see on ticker for Norbert Lu. But he's got, going to have to do some maths here, maybe 460 million in the portfolio. And Naked Wines looks to be about 70 million in this last update.
All right. So a pretty decent size then. Assuming there's not lots of international holdings.
Yeah. I mean, like I say, it's a small market cap, so we see it on ticker because he's a big owner in the company, but it could be other stuff we're not seeing.
Yeah, it's hard to say.
What about Greg Alexander? Does he own a significant amount as well?
He's got a much bigger fund, I think.
I would assume.
Yeah.
I think
It's
this could be a good one to vote on.
3%.
Yeah, it's his 10th biggest position.
Yeah. Of what, we can see.
Yep.
Some naked wines.
There's some smart people that seem to like it, but yeah, I'm struggling with a few things here.
There's a lot of smart people who like Carvana also, but like,
Yeah.
I mean,
Yeah,
just
it's
saying.
smart people that you can find a smart person that likes just about anything. I think. So,
Right. I was gonna say like the smartest people like Tesla. So
yeah.
Which is now in our portfolio as well.
Are you saying you're one of the smartest people, Jack?
I mean, you saw my analysis. Like,
I think
it's
Jack's
your birthday.
easily,
I'm not gonna push back.
Jack's easily in the top 5 smartest people in this live stream.
like clearly top 5.
Well played.
Shall we wrap up on
Let's
that
wrap.
note? Naked wines. So we got 2 real ideas in there. Whether they're of any value to anyone, whatever.
So we continue with real ideas next week.
Yeah.
Is that the goal?
Yeah, we'll do the remaining 3 at least for the
Karen in the house.
Karen's
my
in the
mom
house.
stayed for the
around.
whole stream.
Wow. It's almost 11 o'clock there.
Yeah.
Dedication.
Yes, it is.
I can see where the man gets his work ethic.
My mom's out here hustling.
Yeah.
She is.
So with that said, please check out all the goodies down in the description. We got the discount link to Seeking Alpha. We got the discount link to Share Site. Check those out. Those go a long way towards helping the channel as well. We appreciate that. Check out the Discord as well. Lots of good stuff in there. And please, just a reminder that the first 2/3 of this was a joke. So please don't sue us. Yeah, that's all I got, everyone. Thank you, everyone, for the birthday wishes again. And until next time.